Any intelligent fool can make things bigger, more complex, and more violent. It takes a touch of genius and a lot of courage to move in the opposite direction. Albert Einstein. My friends, we work very hard to keep our charts, our ideas as simple as possible because in the end, think about what we're trying to do. It's not super complicated. We're trying to figure out price direction. That's it. Pretty much a binary decision. Yes, price can slide sideways, but again, what we're really looking for is price going up or down. And you would not believe how hard that is. It can be very hard. That's why we keep it simple. Occam's razor, that's Occam's principle. John of Occam, a Franciscan friar, developed this thought, and it plays its way out through computer science, complexity theory, all sorts of things to this day. And it is, the more simple things are, the better. As Albert Einstein also said, make things as simple as possible, but not simpler, because then they won't work. So what we do is we've honed this down to a razor's edge. We keep things simple with our price percent oscillator, our weekly vertical crossovers, our derivative oscillator, some Bollinger Bands, and of course, our ever helpful Heikin-Ashi candlesticks. Let's see what's going on in these charts today. S&P 500 down a little bit, Nasdaq 100 up a little bit, bonds down a good bit, gold up some, and Bitcoin down. Let's jump first into the S&P 500 down 0.33%. We have a red down candle drawing for the week after 2 weeks of dojis pretty much, which means lots of indecision. However, that price percent oscillator told us what? That the market still had a lot of downward pressure. Derivative oscillator gaining a little bit of downward momentum. Price percent oscillator heading down. Remember, all things being equal, the market tends to move in what direction? That is the direction of the largest chart, and that is the weekly. That's why these weekly vertical crossovers are so important. They show us sea changes in investor sentiment, either fear or greed. That is going down or up. Look at this 2-day. Now again, this is a completed 2-day candle. The prior one was Wednesday, Thursday. This is Friday, Monday. Price percent oscillator ticking over, going down. Derivative oscillator still oscillating up some because you had a few days of up movement, and you even had, again, the latest 2-day candle, the prior one. The Wednesday, Thursday was up too. So this 2-day candle heading down, sitting right there on that weekly trend line. We go to the half day. We can see again where we've had a few days of down movement. Price percent oscillator heading down, derivative oscillator heading down. This 195 minutes, what is that? 3 hours and 15 minutes. Why is that the half-day chart? Because the market is not open 8 hours. It's open how long? 6.5 hours. That is 9:30 until 4 p.m. So we find this 195-minute chart more accurate than trying to do a 4-hour chart. A lot of charts don't have those. So we created it for hours. Why? Because it works. Shows us what's going on intraday. We don't trade off of it, but it lets us see what's happening in the marketplace, what investor sentiment's like in the morning and afternoon. Now, let's look at the Nasdaq 100, starting with the weekly chart. It was up a little bit, but that didn't stop a red down candle from drawing on our Heikin-Ashi candlesticks. They're different than your regular high open, low close. They're figured differently. We have a great training for you. In fact, I'll put it at the end of today's video on Heikin-Ashi candlesticks. It's probably the most popular one we've done. Price percent oscillator heading down, derivative oscillator negative, losing a little bit of downward momentum. It's probably based on the fact that the Nasdaq was up just a little bit for the day. What about the 2-day? We have a red down candle, has a wick on the bottom, a rather long one, about the width, about the length of the candle, if not longer. Derivative oscillator also still positive, but again, that's just that oscillation from the prior days. And as we look at the price percent oscillator, it's kinking over, going down, similar to the S&P. We look at the half day, and again, several days of down movement. Price percent oscillator, derivative oscillator heading down. So still overall, lots of downward pressure on the Nasdaq, Lots of downward pressure on the S&P 500. Now, what about bonds? Well, we had that weekly vertical crossover going all the way back to the 7th, and we've seen bonds go down some, sideways some, down some, and we're not hitting a lower low so far this week, but that price percent oscillator stroking down, derivative oscillator still gaining downward momentum, 2-day chart. About the same, price percent oscillator heading down, derivative oscillator heading down. Nice down day in the direction of TBF. What is TBF? That is the inverse fund for TLT. And easy enough to find on the chart. It's $17.25 or so today. And you see that it's a lot less. What does it do? It is the single short of 20-year bonds. And it is set up with derivative contracts and such, the people that manage it. Their goal is to have it match percentage for percentage, the opposite of what's happening with 20-year bonds. So you can see TBF is up on the 2-day. You can see where TLT, the 20-year bond fund, is down. So it's an inverse fund. Now it is different. Those of you interested in learning how to practice trade and make money in your practice trading accounts while the market's going down in bonds would be well advised to at least practice trade some of that, or do a fractional trade when you start getting good. See how the extra fees and the way that things are recalculated on a daily basis as far as percentage changes and all go affect you. These kinds of funds are not meant to be held in the long term because there are some deleterious effects if you do that. But try it out and see what you learn from doing it, because it can be a great way to jump in short-term periods and ride down movements. Something you should know more and more about, and you will learn that how? By practicing. We look at the half day and we can see we had 1.5 days of strong down movement and sort of sideways sliding since then, but it is still negative on the half day chart, although derivative oscillator did flip over at the end of the day, but like I said, down 1.24%. Now we go to gold. Gold up 0.54% for the day. And of course, we look at the weekly charts, and it's nice to see gold heading on up, bouncing off that weekly trend line, pulling away from the 8-period exponential moving average line, derivative oscillator gaining upward momentum. Nice green candle forming for the week. That's pretty. What do we see happening on the 2-day? Crossing over quite nicely with the close of that 2-day candle. We told you guys, oops, I pulled my weekly. Well, it's hard to find. There we go. We'll fix that in just a second. I'm rotating. For those of you just listening, I'm rotating over the arrow. I told you to be watching for a 2-day recross. Well, we had that. Those of you who are watching for it, we're watching for it in order to jump in. And I sure hope you use that as an opportunity to potentially jump into a practice trade on the weekly chart. And I'm looking for some way, it's sort of I like to be able to connect more candles, and I don't like to connect opposite candles, but we do have the weekly chart moving up. So that's good to see on gold. And of course, that 2-day recross, a good opportunity. We look at the half day, and of course, we have a nice little trend line there. We see the derivative oscillator heading up, price percent oscillator heading up. Quite nice. Nice to see gold moving. Now, lastly, we go to Bitcoin. What do we see going on in Bitcoin? Well, we have a green candle trying to start the week off, although when we look at where Bitcoin is for the day, it was down 2.97%. You look at our Heikin-Ashi candlesticks, they show you a little difference in the average pace. Check out that price percent oscillator. It's flat. Derivative oscillator is again losing downward momentum. So we have some hope for Bitcoin. Look at the 2-day. You can see a red candle. That's a red open box. A slowdown in the up movement. Topped off about the same as the prior candle. might be part of the reason for a red open box, slow down in the up movement. Derivative oscillator gaining upward momentum, price percent oscillator losing some momentum. And again, it's good to see the 2-day trying to move up, but we don't have a crossover yet, of course, on that all-important weekly. And what do we see happening? Of course, with the half day, we see things just, again, continuing to trundle down, crossing over, going down on that half day. So we'll continue to keep an eye on things and see where Bitcoin is going to head. We're waiting, of course, for what? For a weekly vertical crossover going up. The last ones have been good to Bitcoin, and you want to wait for those. And good things come to those who wait. If you want to learn about Bitcoin, practice trade it with us to learn what you're doing. And the more you know, the less you're going to get hurt and the more successful you're going to be. That's where we are, folks, as we end the day. Appreciate all of our Patreon supporters. And, of course, we appreciate all of you who come to us. If you come to us for our daily trainings, if you appreciate what we do, then, of course, you can show some love at the Patreon channel. The things you tend to support tend to stay around. And we plan on staying around for quite a while. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.